I am Jacquelyn Melinek, as they mentioned, and sitting next to me is Nischint Sanghavi, the head of digital currencies, Asia Pacific at Visa. Over there, we've got May. She's the VP of product for digital currencies and remittances at PayPal. And then we have Adam Lowe, the founder and chief product officer at Arculus, and Sean Lee, co-founder and CSO of IDA. To start off, as many of you guys know, one of the biggest use cases and motivators in this industry right now is payments. We've seen a number of traditional financial services, like the ones we have on stage, enter the arena by partnering with blockchains, using the technology, and really getting into the space. And as we progress through the early stages, I kind of want to start off by asking each of you, how do you kind of look at the current payments on-chain ecosystem today compared to maybe a year ago?
So I do feel that stablecoins, digital fiat, or all different sorts of digital fiat is at the cusp of moving to the next level and to be the future of payment rails. But it's still a long way to go for that till we reach that point. But the current use cases that we're really seeing in the market today, first one is cross-border payments. I mean, everybody knows how difficult it is in terms of having multiple middlemen, in terms of the high cost and the time taken for any cross-border payment today. So that's one of the biggest pain points, and that's where digital currencies are playing a big part in payments for cross-border. Second one is stability. I mean, today, if you're in an economy which has 10, 15% inflation annually, you're losing money every day, and that's where consumers are choosing to park their savings in digital currencies, stable coins, or in crypto to kind of preserve that capital. And this is a big use case that we are seeing in the market today. The third one I see is settlement. Now, I think when we talk about trade flows, commodity markets, capital markets, we started to see digital currencies being used for settlement there, because currently, by the time complete settlement takes place, it takes at least 2 to 3 days, and digital currency has a transformation ability out there. So I think these are the use cases that we're seeing currently. I mean, great to see other perspectives from panelists as well.
So a lot of great context on the use cases. So obviously, as in PayPal, we're extremely excited about revolutionizing commerce. That's really what the heart of PayPal's mission is. And through that, we think about digital currencies. And so exactly about cross-border payments, about making them more efficient, more inclusive. These are all extremely important to have better efficiency in the system, to bring more value back to both the merchants as well as the consumers. And those are ultimately, like we really believe in, for example, our launch of PYUSD last year, which is a major milestone for us, because that really is a testament for us in believing and also then integrating into our consumer and merchant network. How do we make things more efficient? How do you make things more inclusive? And how do you make things more open? And you really then can create a seamless digital cross-border currency, which we think can be extremely powerful for the ecosystem.
Absolutely. So, okay, the mic's on, good. So yeah, it's an interesting view for us because we do a lot of Web 2 payments as well for some of the largest banks in the world, all the way up to bleeding edge crypto platforms and doing full Web 3 and Web 2.5 and everything in the middle. So as we've seen a change over the last year, I'll echo that sentiment that people want immediate liquidity, they want immediate settlement, and they don't want to think about the logistics. So we've taught the world how to tap and pay, and that's what people want crypto to be, right? So that's where we're moving. And I think where the industry has to move is that continued interoperability, because really what consumers want is anything in, anything out, right? I put an asset on platform, you do whatever DEX call magic you need to do in the background, and then get a stable and spend. There's a lot of logistics on payments. People don't know all of the ins and outs of merchant acquirers and issuer processors, and we're not going to bore you with all that. But what crypto's job really should do is exactly what the last talk said. We need to remove entropy, we need to remove inefficiencies, and we need to get consumers in an easy tap-to-pay mode that's anything in, anything out in the most efficient way possible. And that's what I think the community is trying to do.
Well, last but not least, but many of you are probably wondering who the hell is IDA. So maybe I'll explain that a little bit, because obviously you've got very well-known brands here. So IDA is a stablecoin company being built out of Hong Kong. So what many people have always asked, why are you building a stablecoin business in Hong Kong? So let me ask the audience a question. How many of you have been to Hong Kong? Yeah? So the Hong Kong dollar is actually pegged to the US dollar. I think some people may know that, some people may not know that. The Hong Kong dollar has always been pegged to the US dollar for the past 40 years. And the Hong Kong dollar is also not issued by our central bank. It's actually issued by 3 commercial banks. So essentially, the Hong Kong dollar has been a stable coin for 40 years, right? So essentially what we're doing is actually bringing a DLT blockchain-based layer on top of that to facilitate things like programmable payments, cross-border trade, as well as other economic activities as it relates to digital assets. So for us, we don't actually look at stablecoin as an asset, because I think a lot of the time we say, oh, it's USDC, USDT, which coin are you going to use? But we actually look at it more as an infrastructure, right? So if it's a financial infrastructure that people are using without bothering them with the actual fact of actually managing these crypto assets, then you will indeed get the broader adoption that many of these players have already proven, but continuing to do so in a very innovative manner. So maybe I'll stop there first, and then we can talk about some other aspects.
No, that's super helpful and super insightful. I like the point that James made about making this accessible, and I feel like for Visa and PayPal, that is so important, especially for your users who are not in the Web3 space but maybe want to access it. On your point of view, for the two of you, how do you kind of look at accessibility when it comes to stablecoins, payment remittances, and so on? And what is Web3 getting right about it? And then on the other side, what do you think they're getting wrong?
Why don't you start? Please.
We think actually access and utility are extremely important, which is why actually a few years ago we introduced cryptocurrencies just to buy, sell, hold within the PayPal and Venmo wallets, because that kind of starts taking you into the first step of the journey. It's a trusted and familiar platform for users. It's a simple and seamless UX, which they're familiar with. And so now it starts making it, and it's a trusted brand. And so people start to feel a lot more comfortable. And obviously you don't stop there with that. You start continuing to drive more and more experiences that provide engagement, that provide more usage for their cryptocurrencies. And I think that's actually extremely fundamental, and that's where like Web3 is a huge leap for the mainstream user. But when you start kind of going from a Web 2 to 2.5 or somewhere in between, you really need the ability for people to access it in a lot more user-friendly way, but then also have the utility for it. So what do you do with it now that you have your cryptocurrency, and what experiences can you provide? And so that's really how we think about it, is like, how do you continue to drive deeper and more utility and more access?
Sure. That's a great point. I think building on that, I think one of the key things we see, and which is very underrated today, is user experience and design. I think today the way Web3 ecosystem has been built has a lot of jargons attached to it, there's a lot of complexity attached to it. But if we want to reach mainstream, which means the product needs to come to a point where every single person with zero knowledge, really zero knowledge, should be able to use it. So, and I was talking to somebody in the Aptos ecosystem, in the gaming side, and they talked about the exact same thing, that if a game needs to be there, the Web3 element does not need to be upfront. And that's the thinking that we also have. Another thing is security. I mean, as you see the more advancement in technology, security needs to keep up to make sure that consumers, governments, everybody has to be comfortable with the level of security they are getting. So I think these are the two big things that we see to drive that mainstream adoption. But there are some additional points as well, right? They have trust. I mean, as you have more of a decentralized economy, people will need someone they can trust. And that could be the application layer on top of it, which could be some of the bigger names we've been seeing today. And then there are other points in terms of CVP for users. What is the actual user experience? How do it help users? And the merchant acceptance. If you need enough merchants to accept everything, otherwise there is no way for you to make payments. So I think these are the few points that we believe to get to mainstream for Web3.
Mm-hmm. And then for James and Sean, how do you think the industry aligns or differs from maybe the perspective that we're hearing from Visa and PayPal?
Maybe I'll take a stab at it. I mean, we've been talking about complexity for a very long time on blockchain and crypto. And I think in 3 years' time, we're still going to talk about complexity, right? I find it very amusing that you go to every event and they either complain about regulation or they complain about complexity. So we actually have to go do something about it, right? You have to do something about it. If we continue to think about crypto in the form of something that sits outside of the traditional world that we live in, then you will always have this complexity. Because the traditional world that we live in, whether it's a card-based system or a tab-based system, have been around for decades, right? People's mentality isn't exactly going to change in that regard. And then we keep forcing people to go open accounts and manage your private keys, custodial, non-custodial. It becomes so convoluted that you're never really going to get to that point. So I think this new cycle, if I were to call whatever that we're going through now in 2024 a new cycle, I don't mean it from a market price perspective, I just mean it from an innovation cycle. I think what we're really seeing now is how do you actually embed these crypto assets, technologies, right back into the systems, right? I don't really like to call it Web 2.5 because I don't understand what Web 2.5 is. I don't know why it's not 2.6 or 2.7. But the reality is you are blurring the line in between, right? So you're elevating the traditional systems, and then you're also dumbing down the crypto technology so that you can actually make it, right, mass adoption. So part of what we're doing, for example, is what if you go to your subway station or you go to a local 7-Eleven and you're tabbing whatever, whether it's a phone or a card or whatever it is, and you're automatically spending crypto. But what if that crypto that you're spending, let's say a stablecoin, is automatically deposited into your account because it's connected back into your traditional banking system as well? What if all of that is connected, right? We live in this world where everything's all siloed, and it makes it very, very hard. That's why we have the complexity. So these things really need to be weaved together so that the user experience can truly be enhanced. And that's what we're working on.
Yeah, I think similarly, right, I like history. And if you look at the 1800s in the US and around the world, that's when trains proliferated, right? The Wild West was fun, 1890s. And people don't know it, but the trains in the West actually used a different width of track than the trains in the East. And in different countries around the world, there were different widths as well, and that was a problem. So that's where crypto is now, right? Everybody picks some gauge railroad and none of them work together. So to your point, we're doing exactly that. We're figuring out how to get all of the trains to switch and run all of the rails in a way that's interconnected and easy for people to understand. And that's hard, and the people have to get that. You know, a lot of times doing both Web 2 and Web 3, on the Web 3 side of our business, we actually have to slow stuff down. Like I could instantly settle with legacy systems. They can't settle that fast, right? So it's challenging. We are getting there, and we are going to get there with a UX that everybody understands. But the most, I think, not valuable, but one of the things I most agree with is don't make consumers change habits. If you try to make them change a habit that they don't feel is broken, that will fail. So an interesting stat is, does somebody want to try to call out what is one of Apple's lowest adopted products? Takes the longest adoption curve. Apple Pay. So you may not realize that Apple Pay at 8, Apple Pay is one of Apple's lowest adoption, lowest usage rates ever. So that is an interesting stat because cards aren't broken. So that's an idea of where people have tried to change a habit, tried to change something with consumers, and it failed.
That's interesting. I use Apple Pay, but it took me a long time to use Apple Pay. I was very adverse to it.
Yeah,
at first.
ask Visa. They have the stats. It's an incredibly low percentage.
Ask Visa. That's why we've got them here, right? I think on the topic of what you guys were talking about, there's also just the aspect of, you know, on-chain transactions can solve a lot of problems that maybe the mainstream audience doesn't see yet. And it will take time. There's going to be friction. And I would love to know kind of each of your thoughts on what exactly the panel title suggests is like reimagining payments. How can we kind of move forward to really get over that hill and reach that point where it is like an escape velocity where it's a no-brainer that we use this, but today we're not actually there?
I can start. Okay. Well, why don't you go ahead, actually, because since you were anyway on that thought flow.
Yeah, so I think, you know, the worst part of crypto for me, or when I talk to users, is on-ramp and off-ramp. Right, so exactly that. If I'm getting paid in fiat, it should seamlessly hit a bridge that bridges to pick your favorite stable or whatever. Then I'm in system and I'm spending, and I don't know it. I don't have to constantly mint and burn and off-ramp and pay a fee. Like once I'm in, it should just be part of my daily driver life. So I think if we solve that, getting rid of on-ramps and off-ramps, and it's just assets that I hold, you know, I don't particularly care that if it's $1 or USDC. Now I might care if it's USDL since it's yield-bearing. But something like that, right, it's really important to the average person that it's just, they have digital dollars, they don't have crypto, and then they don't have fiat. It's just assets they hold.
Nischint?
I think in terms of the way I look at it, I don't think every single payment needs to be force-fed to be on-chain. I think there are certain aspects where on-chain payments work beautifully. And especially now when you're looking at the entire revolution on whether it's real-world assets or other type of tokenized assets coming up, the best way to make payments for those assets is through tokenized technologies, whether it's a stablecoin, we're talking about tokenized deposits, all of that can be made pretty much atomically, and as you said, it can be very seamless. There are other aspects where payment works pretty well today, and we don't probably need to change every bit of it and try to force feed it to move on-chain. So I think there will be a certain level of, I would say, complementary technologies which could exist till a point where one particular technology takes over. It may not even happen that one technology completely takes over the other. So at least I do believe there will be a balance there.
Yeah. How do you guys think it differs between regions, given that we are in Korea right now? Nischint, you're mainly focused in the Asia-Pacific region. I think, Sean, you're in Hong Kong. Correct me if I'm wrong. What do you think is the biggest driver right now for on-chain adoption, for transactions and payments here, opposed to other regions like North America, Africa, Europe, so on? May, go ahead.
I can jump in. So I think in the US, and I think the team touched on this here, a lot of the problems are kind of already more available or solved for, right? But when you start thinking about other countries internationally or emerging countries, think of like even actually Philippines when you think of Africa, you think about the Middle East. Think about that one day you could wake up and 50% of your country's currency is deflated. Like that is like, that's significant, right? That's severe. That means like people's livelihood, people's lives completely change, and instead of thinking like how they grow their businesses, how do they even pay food, right? And so when you start thinking about economies like that, and then you start thinking about where stablecoins or on-chain payments can actually help if they had access to USD, right? Like PYUSD as an example. They could hold that in a stable currency, they could send that around, they could pay for things. I think the other aspect to think about is, we haven't really touched on like B2B payments. We know that's a massive market that's still been untapped. Why has it been untapped? The current solutions in the market don't really solve, and they aren't a good fit for it. And so, but I think cryptocurrency, or especially actually stable coins, can actually really unlock that and provide an entire new like unrivaled evolution in B2B payments that is like the next frontier that it hasn't been. So exactly as actually where Nischint was going is like there are things that have been solved in certain markets in certain places, while maybe Apple Pay is not as adopted, it's still highly adopted, within Apple, there's not comparison. But when you think about then countries of why does it cost, like if I'm in Dubai and I want to pay on a US merchant, it'll cost me, if I use my credit card, 2%. Sorry, Nischint, no offense if it was a Visa card, but it'll cost me 2% plus cross-border fees. That's expensive, right? And plus, by the way, good luck if that card even gets accepted and doesn't get declined. And so when you think about it in context of what a user is trying to do, the costs that are actually implied, and then the exclusion that happens because either payments fail or different things that aren't accepted and the networks aren't talking to each other, or the experience is really complicated, this now opens the door to an entire new world that it can unlock, still be complementary, but unlock in the ecosystem.
Yeah, so I think that's a great point, especially the B2B payments. So the current systems really are kind of rough, and there's a lot of fraud in B2B payments and push payments now. So getting that digital signature from a blockchain B2B payment, I think, is a fantastic idea. Similarly, you're asking about regions. We do see it very regionalized. So in LATAM, in some places, every moment they hold their native fiat, they're losing money. So the faster they get into the dollar or some other currency, the better. And to your point of, do you go over a traditional network and the merchant pays the merchant discount, or do you go wallet to wallet? Like that's exactly what we build, right? So like when you tap an Arculus card, the card knows, oh, this merchant directly accepts Web3 payments, we go directly over the Web3 rail, or no, it doesn't, defaults back to a Web2 payment rail. So yeah, it's exactly that, is meeting merchants and consumers where their demand is.
Maybe we are a panel, right? So we're about to debate. So let's do a little bit of that. I think from a reserve perspective, holding it in US dollar, whether it's stable coins or otherwise, makes sense, right? It is the most dominant currency, whether we like it or not. The reality, though, is if you are facilitating B2B or even P2P payments cross-border, why does everything have to go through the US dollar?
The US Marine Corps.
Right? US Marine, well, I would say yes. So the notion that in the traditional world, when you pay each other through the banking rails, right, inevitably you have to go through SWIFT, and SWIFT is denominated by US dollar. So you have no choice, right? You have no choice. But now that we're moving on chain, when we're leveraging traditional networks and new networks, why do we still have to do everything over US dollars? So I think what we're maybe going to see, especially in Asia, is that if you're doing business between, say, Hong Kong and Singapore, or Singapore and Japan, Japan and Korea, well, can you do direct currency swaps? Direct on-chain currency swaps, right? What if you're able to do that? And also, what if you're able to have on-chain pricing oracles that tells you exactly what those pairs are in a completely transparent way, rather than being dictated, by Visa or by the banks, right? What if you can do that? Then that really changes the economic trade situation, especially in places like ASEAN, right? The Southeast Asian countries, or LATAM and Africa. So I think, again, from a reserve perspective, I totally agree, right? I mean, I would keep my money in US dollar as well. But if I'm actually facilitating economic trade, the notion of actually having local currency pegged stablecoins to allow for that still with a compliant on-ramp and off-ramp becomes very critical. We're not there yet, but we're hoping that that type of infrastructure and that type of experimentation starts to emerge across different regions.
Do you think the demand and need for that is kind of coming in like the coming quarters or years? Because I feel like it's a liquidity problem right now.
Exactly.
So how do you kind of approach that, given that you think there should be other like non-US dollar backed currencies out there that circulate? And I understand your point. I just think it also comes down to liquidity.
Well, it depends on how you look at liquidity. Are you looking at the overall global number, or are you looking at regional numbers, right? If you're doing country to country, well then liquidity needs to be provided by liquidity providers in those countries. You're not looking at the overall global pie, you're looking at jurisdiction to jurisdiction, right? And by creating these jurisdictions, look, Web3 is all about connectivity, right? Web3 is about openness. Web3 is not about having one single system that governs them all, right? It's not about that. So by connecting one hub to another hub to another, using public blockchain like Aptos and others, then you will be able to do that. And liquidity will automatically come in. So if you're, like for example, we're doing some projects with the Middle East, right? It just so happens that the Hong Kong dollar, like I mentioned, is pegged to the US dollar, and the UAE dirham is also pegged to the US dollar. So what does that really mean? When I do a currency pair between the two, I can essentially facilitate it using US dollar liquidity if I want to, or local currency liquidity to pump into it. So there are hop to hops that you can facilitate, and eventually you start to build a network that isn't controlled by a centralized party, but at the same time is still fair and transparent. That's what we're going to see. So it's not a, hey, do you have trillions or billions of dollars that you can pump into it? It's not about that. I think you can actually do a Lego block approach and build it up from there.
Sorry, just to chime in. I don't think, and maybe I just want to make sure my intention was right in the statement, it's not about pumping in more of the US dollars. It's actually breaking down the interoperability. I think that's where actually that stablecoins have the power to, because of the on-chain. And to your point, how do you take that a step further and actually think about more interoperability between currencies? But the reality today is like, let's just take, just because I was just researching this the other day, like just coffee beans. If you want to buy coffee beans, they're commodities that are traded in US dollars, even if in Africa they're buying and trading those. There is a common stable currency, to your point. But today the system is wrought by time, by cost, by complexity. And so how do you take then the stablecoins, deliver that, and then take it into a future of like even more flexibility? So I think that's where the power really comes in.
I mean, just to add to both the point questions earlier, right? I think we've seen one thing is central banks in Asia Pacific are quite forward thinking. So they have gone, even for some of the Web3 legislation, we've seen CBDCs being launched in some markets as pilots. So we've seen that thinking to support stablecoins, CBDC, and other forms of digital fiat. Of course, now they might want to move away from the US dollar as time goes along and they have those mutual. But I think that also means you have to build those corridors one by one. It has to be like Hong Kong, UAE, or some other corridor similarly. So it's not going to be something that can enable cross-border trade immediately for all corridors, but it can be a start, I think, and being fiercely competitive of your own currency will also allow them to look at beyond US dollars as well. So I think it's still debatable, I would say, but yeah.
It is, yes.
Before we wrap things up, I feel like it would be amiss if we did not bring up Aptos, given that we are at their event. What do you think are some opportunities that Move enables, Aptos enables, and the on-chain potential going forward? And I know some of you are chain agnostic, but just entertain me for a minute, and then, yeah. James, go ahead.
I'll start from the developer side and the implementation side. So as probably one of the nerds up here, having written in Move, right, the smart contract language, it's fantastic. It's much easier to write than some of the other smart contract languages on other chains. So having to develop it, sincerely appreciate that. It's been great working with it. And in payments, a huge thing is kind of the sub-second finality, right? Like that is massive. It just de-risks the transaction. It de-risks a lot of the things on the network side. It de-risks a lot of the implementation. So the speed and finality of the chain is fantastic. The language of the itself for the smart contract, it is great. The documentation, I don't know if there's devs in here that write the documentation, is great. Try to go implement on some other chains and read the dev docs and you'll be sad. So it's just been a fantastic experience working with the team. So I sincerely appreciate it from the implementation side.
Amazing.
Maybe I'll add a little bit as well. I totally agree with you from a programmability and language perspective. I actually used to run the Algorand ecosystem. So I was the CEO of the foundation. So I have firsthand experience looking at how to impact the developer community given the tools that you give the application developers to actually build on top. A lot of the Aptos ecosystem are indeed very large companies. I think we saw some of the names on screen earlier. And if you think about these traditional, the word traditional sounds so old, but it's not old. Like the vast amount of kind of software engineers that are out there in the enterprise space, they are very used to object-oriented programming, right? And looking at the various different smart contract-based languages out there, there is a level of familiarity with Move, right? It's something much easier to pick up because it's very similar to things that they have done before. I've talked to many larger banks and whatnot that have really talked about that. So for us, it's quite important because we are building a regulated stablecoin. So what that means is we are working with regulated entities that are going to be using this infrastructure. So having that toolkit and the programming language that is somewhat familiar to a lot of these existing software engineers that are out there is very, very important. So that's why we're working with Aptos.
So maybe I can just do a quick one on this one, right? So I think as the blockchains are getting better in terms of scalability, faster, cheaper, and which is what Aptos has shown ability to deliver already. Some areas we see that can move forward in the space are your real-world assets, and those I think are untapped areas which I think Aptos will probably be very well primed for, in addition to all the things and the big names that we saw already. So I think, yeah, we definitely believe they build a great ecosystem out here.
Final thoughts, May?
So, I mean, I think I kind of echo a lot of the sentiment here. I haven't checked out the dev docs, but I will. But I think we need that continued, and I think that what Aptos really brings to the table is that speed, the transaction costs being low, and those are incredibly important when you think about payments specifically, and it's really, really meaningful. So I'm highly encouraged by what the team has done, and Mo and the team, I think it's been fantastic to watch and just kind of be able to see the progress. So it's really great.
Yeah, amazing. Well, that is our time today. Thank you to our panelists for your insightful thoughts, and thank you to everyone for listening in.
Thank you.